Steve. Now you should be able to see good old Albert.
There you go. Looks good.
All right. Perfect. Thank you for pointing that out, Scott. It's always important for people to be able to see the screen.
Helps.
So Steve, happy Monday. What's going
Happy
on?
Monday. What's going on? It's summertime with no air conditioning in San Diego. You know the drill.
Yes, and I'm usually right there with you. Of course, I'm in Texas right now where I kind of feel like I'm sitting in an iceberg because I'm not used to this air conditioning,
Yeah.
fancy air conditioning. In any case, welcome everybody to another Monday edition of Office Hours. Today's the 14th, and wow, it seems like yesterday was June, and the summer is almost history. And of course, the fall will be upon us soon. But right now, the market is, well, you can't say it wasn't active today, but we did have a little thing called a gap up. But you know what? I'm getting ahead of myself, Steve. So
Sure.
let me do this first. Once again, welcome
Disclaimers.
everybody.
Yes.
We know you guys have busy days, even though it is the summer, but we always like to thank you for popping in and hearing what we have to say today. And we do have some good stuff, but before we get to that, let's make the lawyers happy. I just want to make sure that everybody in attendance realizes that the information that we share with you is for educational purposes only. Please don't take this as a solicitation to buy or sell securities or anything for that matter. Everything that we share is for educational purposes only. If you do need investment advice, please seek out a registered investment advisor or a registered stockbroker that is licensed to give you information of that nature. All right, I think we're done there. So before we get on to the nitty gritty, just want to make sure everybody is aware. For those of you who are regular attendees, bear with me here for just a second. This is mainly geared for the new people who might not know everything that the Trade Ideas community is composed of. And it all pretty much starts with the trading room hosted by Barry Anderson. That room opens up well before the market opens. Barry's in there. There's typically anywhere between 400, 500, 600 people on there or in there on any given day. So the key is that it's free. You don't even have to be a Trade Ideas subscriber to participate in that room. So if you have not been taking advantage of that resource, you might want to start. Of course, today's Monday. It's myself and Steve in office hours. Steve takes the helm tomorrow for Trade of the Week. Andy Linloff typically rides shotgun with him. And then on Wednesdays, we like to switch it up a little bit, bring in our CEO, Dan Merkin, and our Chief Technical Officer, Brad Williams. Always interesting, always entertaining. Now, Andy rounds out the hourly webinars with the Trading Studio on Thursday. I ride shotgun with him. Then on Friday, we've come up with something put our three heads on it and see what happens. So people are responding to it well. So if you haven't been attending and you need some questions answered, by all means, next Friday, make an appearance. And then, of course, just a quick little peek as to our subscriber base after we introduced Holly, our AI, who, by the way, had a very quiet day today, which we'll get into the details of shortly. And, of course, we do have this thing called the Brokerage Plus for interactive brokers. It is in beta right now. It is free to use if you are a premium subscriber. When this thing comes out of beta, it will have a substantial fee, and I want to say somewhere to the tune of 1,100 bucks. But if you're already using it, you will be grandfathered in. So just a quick recap, this thing lets you automate any strategy that you might create with Trade Ideas through the Interactive Brokers platform. And also lots of different ways to show you the information, basically a platform on a platform, but we've added a lot of bells and whistles. So if you're interested in that and you're a premium subscriber, it's already resident in the system, all you have to do is access it. Okay, moving right along here, we've got yield itinerary, syllabus, whatever you like to call it today. And of course, as always, we're going to let Steve take the baton here, talk a little bit about the indices, where we were, where we've come, where we potentially could be going. So Steve, if you're ready, I'll just
Sure.
kick the can over to you real quick here.
Sure, and I might add on that brokerage plus slide we came through, that's really for late intermediate advanced users. Definitely not something for the new trader. We really want to get you guys crawling before you walk and start running. And basically the brokerage plus is a running type of advanced tool.
Yes.
So keep that in mind. All right, I'm happy to talk about this crazy chutes and ladders market that continues to scratch a lot of heads. I mean, as we went into the weekend, this is all we had to go on. We had a horrible down candle on a huge volume on Thursday, and then kind of a small wedged doji candle here on Friday, which is, or was, I should say, barely holding. If I zoom out here, you can see the relevance of that trend line. And after today, what do you know? That trend line held. It is still intact. But going into the weekend, a bit scary, a bit goofy, a lot of nervousness, and then we come out of the weekend with no major, my opinion is no major geopolitical news. The market has nowhere to go but just bounce right back up and adhere to the trend line. So the spiders went ahead and dug themselves out of a hole. They were below this resistance line and barely above this trend line. I said, the bulls are gonna have to retake this line right here to get back in charge, and that's exactly what they did. Had this trend line broken, we were down here right now, we'd be talking about something totally different. But the buy the dip market is still fully intact, and technically speaking, it did what you would expect it to do in terms of holding a trend line. And again, there was no guarantee line would have held until we got confirmation today that it did. So, we threw up some red flags last week on this candle right here. I called this the middle finger candle, where we broke out to new highs and reversed intraday. That's still fresh in my mind that happened. And the same thing with the Qs. They threw up kind of the same type of a candle. Amazon, just getting away from the sectors or the indices a little bit, Amazon was looking pretty toppy as well. So all that may not make a difference. It may not even matter. These types of candles in the past, if we continue to hold on to this trend line and continue to stay above this prior resistance line that became support, we got back above it. So, kind of back to neutral here. The big middle finger candle and the red hot bar candle certainly got our attention last week, but in the end, it was a stick save, to use a hockey term, and the price was kicked back into play. No harm, no foul by breaking that trend line. Back on the Qs, we were getting very close to talking about a possible gap fill after this big red down day, but we never really got there. Friday gave us a bit of a bounce and then a big gap up today. So we're back up kind of in no man's land. It would be really nice. You can see if we zoom in on this candle, kind of interesting that we traded above the orange line here, which corresponds to this prior high. So we traded above, there we go. And then we kind of closed right at this line. The bulls would probably like to see another day get back into this area in here and close above this line to basically recapture what was essentially lost back here on these days. And looking at the IWM, not a whole lot of excitement over there. I mean, they're way off their highs. They can barely even get back above this line, so I'd be watching this 138 level, 138.80. You could see it was prior support back here. We broke down through it, so the IWM, Russell 2000 small cap stocks, they're going to need to get back up into this this level for at least some sort of happiness on the bull side. And then lastly, the big blue chips, the diamond. I mean, again, I'll go back to the information we had back here. This was quite a topping tail. And I mentioned watch these levels below that green line. If we break, we could follow through. We did. And we filled one gap, but we stopped on a dime just like the other indices and gapped right back up. So Again, on this one, there's kind of conflicting things I'm seeing. This topping tail, again, is very ominous, very much pronounced. Not giving up on that yet, so we'll see what happens. You know, lack of follow through doesn't always mean that there still may be some more selling. We'll see what happens. And again, on this wick today, you can see we traded above that line that I had in there in the sand and then closed back down below it. So we might need a few more days in the spiders, the Qs, and the diamonds to really see what this price action wants to do. But the big story is that there was a stick save. There was a big moment of avoiding a technical breakdown of this particular trend line in the S&Ps. And that's, at the moment, that's really what I'm focusing on the most, the SPY, the S&P, and this trend line. So, all right. That's going to be it for that. Quick question to Don. Will you be using any other online brokers for the brokerage? Plus, right now, it's only Interactive Brokers, so we're going to work out our bugs and get our beta out of beta in production. I don't know who the next platform brokerage will be, but I would imagine we'll be moving on to yet another platform after we get the Interactive Brokers platform set out, just to answer your question there, Don. All right, Jamie, unless there's anything else you want to add, that's kind of all I've got on the indexes today.
No, you covered it pretty well, and you know,
keep an eye on that trend line.
Yeah,
that's the number one thing I'm watching. And again, I'm not forgetting those topping tails, both in the spiders and the diamonds. We'll see how that works out. But typically, after a long move up like that, when you see a big washout, big move up and a washout back down, that's signaling a time of near-term rest, and we'll see what happens. All right, so let me send it back to you, Jamie.
Good stuff. All right. All right, so just let me know when you can see again, Steve.
I can see your agenda.
Perfecto. Okay, so as we're about to look at Holly's activity, what we're going to notice, and of course, those of you who have premium already know this, very quiet day for the AI. And that's very typical of when a large gap comes into play, either to the up or downside. So let me minimize this little guy. Of course, I'm working on a lot. I feel like I'm working on like 1/10 of the screen space right now, so bear with me while I move a few things around to my smaller monitor here. Okay, so what we're going to do first is we're going to talk about Holly as soon as I can pull her panel over here. All right, so there's, as we can see, only 4 trades today. Now let me get our strategy panel over here as well. Okay, hopefully everybody can see that okay. So here we have Holly, and we only had 1, 2, 3, 4, 5, 6 strategies out of 50 base strategies make the cut for today. Of course, that was after we uploaded and incorporated all the market data from Friday into the database. So for those of you who are not familiar with Holly, what is Holly? She is a AI system based on statistic probability. So what is her strong suit? Well, as we can see from the strategies that made the cut today, this is the statistical probability for anything coming out of these strategies today. And of course, we can see just because a strategy makes the cut does not necessarily mean that it's going to issue a trade.
Interesting to note the directional bias coming into today too. I was kind of surprised to see that.
Short strategy, no short strategies. Of course, I'm glad you brought that up, Steve, because you know there's always a gap between what the human sees and what the human likes to see in the technical chart, and then of course the way the statistical system works, right? So a lot of the times what we think might happen doesn't, and of course as the market might have been looking a little shaky before we had the magical gap up today. And I always find it funny that it's a gap and not a small gap and then a trade up, but a significant gap. But let's not go down that rabbit hole today because it runs very deep. Now, let's focus on Holly's activity. So we had this many strategies, but only 2 of them fired. And what I always like to point out here is that you've probably heard this before, people saying, you know what, all my work is done the night before. All I have to do for the next day is react when I see these certain things happening that are part of my trading signal production, whatever it is you'd like to call it. Holly's the exact same way. All the work's been done. the traps are laid. We could view these strategies as very specific traps. If something is just the right size, it falls through the trap. But if it's not specific, it doesn't fall through. So we only had these guys issuing 2 trades today each, bullish pullback and wake up call. Of course, we can see what the statistical probability was from each of these strategies today. Wake up call came in at 51.1%, bullish pullback 63.9. Just so happens this guy hit 2 out of 2 for 100%, and this guy went 0 for 2 for 0%. Here are the specific trades. Now, usually we've got a lot more trades to peruse here and go over, but hey, when this gap up occurs, and we can see whether it's the daily or my intraday here, not a small gap by any means, pretty beefy little gap there, and then more upside. So whenever we have this gap, these very specific traps don't get hit. So we had low trade count today, only 4 longs. Never really was rat-a-tat-tat all at once. These two came out in pretty close proximity to each other, 40 minutes later, and then about 5 minutes later, 6 minutes later for the final trade. Now, when we look at the results today, whether it's risk on, risk off, 4 cents versus 7 cents on risk off, and we can see that while she started off in the green, just wasn't able to gain a lot of traction as the day went on. Now, the one thing I will point out is we did have a nice example of a risk on trade. Now, before we go into what risk on is, we can see risk on and risk off P&L curve here. And this is not something that you have to pick before the session starts. It's really better addressed on a trade by trade basis. And what is risk on? This is just the P&L if Holly holds everything till the close, right? So if you would have jumped into all these positions, by the time it was all said and done, you might have been up 4 cents. You might have been up a little bit more depending on slippage, or if you got a worse price or a better price than the AI, but nothing to jump up and down about. Risk on, if you held everything into the close, maybe up 7 cents on risk off, risk off, and 4 cents on risk on. But what I always like to point out is we can view both of these columns, risk on and risk off, and the name of the game is to try to get something in between a penny, which is what Holly took. And why did she get out of the trade here? If we look at the exit reason column here, reduce risk on these 3 and profit save. So there are five things that can get Holly out of a trade. We've got our traditional things like stop loss, profit target, and a timed hold. Of course, every one of these intraday strategies that you see up here is designed around a specific intraday hold time. So if she hasn't been stopped out or the profit target has not been hit in 45 minutes, she plugs out on a time stop. Of course, on this one right here, and of course, when I double click on Wing, it automatically populates my intraday chart here with all of the important metrics. Entry price, blue box, blue line. Stop loss in red down here at the bottom of the shaded area. And then profit targets, if there are any. Of course, sometimes on the intraday, you have to use a larger time frame because it's typically up in the top there, not currently visible. Of course, the green box is just where the stock currently is or where it was when the market closed.
And the daily chart will show you that too, if you can't
Absolutely.
see the target.
As we can see right here, and if I squish this down, we can eventually make out that profit target up there. And if we went to a 15-minute time frame here, it would probably make that target easier to view. We're still a little bit out here, so you can see I squished it all the way up on a 15. But if you're ever wondering what that target is, you can look at one of the fields, or you can just go to the daily and check it out. So before I move on here, let me just get myself back in a 5-minute, since that's my eyes prefer that. All right, so how do we decide to go risk on? We see that Holly got into this trade and she only stayed in it for approximately 35, 37 minutes here. So she makes the entry here and then just gets sideways action. So we've programmed Holly in the capacity that she cannot allow a winner to evolve into a loser. So once she's up, she has to protect it. So we've implemented basically a modified form of trailing stop, whether it's a winning trade or a losing trade, and of course, reduce risk. So she gets sideways movement and time passes. So the longer she's in the trade and the longer that it's hovering around that break-even point or not progressing, she has the option to close that out. So that's what she did here. Now also notice the darker shaded area here is the time spent in risk off. So we can see the entry here and the exit right about here. Holly captures a whopping 1 penny. Now let's backtrack back to what I was saying earlier about the way a statistical model views the data versus the way we humans interact with our charts. Holly can see charts, but not in this capacity. It's more of a shotgun spatter pattern, so to speak. All right, not the types of patterns that we want to use to, give us guidance. So if we see Holly, we're like, okay, wing, this looks good. I like this entry point. I'm going to participate with Holly. We pop into a couple 100 shares. And then we get this sideways action, which it's still not encroaching on the stop loss, not even coming close. So a little sideways action, that's not a bad thing. Sometimes they go immediately. Sometimes they hug this line before they take off, right? But in any case, we see Holly getting out for a penny. We think to ourselves, well, I know she's programmed to do that. I don't really see any need to get out of here. I'm going to keep my original stop loss, or, as time progresses, you could even mark up the bottom of these candles here and go, I'll stay in it a little bit longer. I know she's getting out, but I think there's more, more cookies to be passed or to be had when the plate comes around. So if we decide to go risk on, which is what this is, and stay in, then there you have it. You're accepting more risk, and eventually, boom, you get rewarded. Simple as that. If you stay in with Holly, or if you get out with Holly, that's risk off. If you think there's more juice in the trade and you see her getting out and you stay in, that's you going risk on. Or, as I always like to point out, when you're getting to know a new technique like risk on, risk off, why not do a little bit of both, right? Can't hurt. Get you familiar with the process. You see Holly getting out, peel out a half, adjust your stop loss accordingly, keep the original, wow. Well, Steve, if I drop off unexpectedly, it's because there's a huge thunderstorm. Just be aware.
Lovely. Okay.
but
But
we'll
yeah,
keep
I'll chime in on that. There's a great psychology behind that too. A lot of us, we fear that we're going to lose the P&L that we see on there, and by selling half, it kind of alleviates that anxiety of risk versus fear. What should I do? What should I do? Well, just take off half, and a lot of times it makes the emotional decision a lot easier by just kind of letting the other half ride, patting yourself on the back, knowing that you took a winner off on half, and hopefully testing patience and learning patience of letting stuff work for us as we're in the money.
And of course, one of my newest favorite lines from our buddy Steve Burns, right?
Yeah.
Okay. I love that line. He's like, traders must always adhere to their rule set without deviation, but they must constantly adjust their expectations. And of course, I'm paraphrasing, but I think everybody gets the message, right? And we're going to talk about expectations in a little bit here as well.
Yeah, and Dante appreciated that comment, so let me expand on that, because it's difficult as traders. We're wired as human beings to go for the bird in the hand is better than two in the bush. But if you really want to break out and make money and have stuff start working for you, you got to go for that two in the bush sometimes. And, selling half, again, alleviates the fear, because we are wired incorrectly. We are wired to take that money off the table that's a positive gain before it's taken away from us, when in fact that's our fear, when in fact our fear should be taking that money off the table too soon and not letting that good position, good decision making process, and good trade work for us because we had a momentary hiccup in our thought process, or we overwrote our rules, changed our mind, had an emotional moment. So again, going back, as these trades go in our direction, you've got the devil on one shoulder saying, hold on, and the angel on the other shoulder saying, get out and sell what you can. If you sell half for a profit, those two little angels and devils will disappear and make the emotional side of trading so much easier. So
yeah,
we're not
wired
for that. Yeah, we're not wired for that. So if we can just be aware of it and try and work on it, that's a good thing to be aware of.
Absolutely, absolutely. So, Wingstop, not really a stock I expected to see today, but hey, that's the market. Makes me think of Tommy Boy. But anyway, Wingstop. So we get the signal from Holly here. We notice that it came from bullish pullback. Oh, look, 63.9% statistical probability on our side from the get-go. So we've got that going for us right off the bat. We take the signal. We decide to go risk on. We come down here. Now, of course, what sticks out to me is that we're entering here right above this initial little breakout here. And then, of course, it pops up, and then it hugs that line, and then slowly but surely, creep, 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 bam. See how I've drawn the line straight across from the previous high? It's in this channel. We're already in it with Holly. Maybe we're in the full lot. Maybe we're out a half or risk off. Nothing wrong with that. But then, boom, we see a range break. All right. So we're already in it way back here based on statistical probability, which, by the way, 63.9%, that's pretty large. All right. Vegas roulette only has like what, a 51% chance with the 00 on there, right?
Yep.
So we're talking about almost 64% here. That's very strong, very strong. Okay. So we're in it here, and then once we notice another simple pattern emerging, an excellent time to add to that position, which is one of the harder things, especially when you're a new trader, to get into the habit of. You're like, well, I'm already in the money good. I'm not gonna buy more of it. Once again, exactly what Steve was talking about. That's the fear factor, right? When in all reality, this was a beautiful opportunity to leverage your position with more shares and get the second part of that move. Knowing the whole time that you got some very strong statistical probability behind you. And by the way, nobody else is delivering the data in this format. Statistical probability right off the bat. Of course, when we're trying to temper our expectations, we can always look to the left here and go, well, it's not at all-time highs, but it's definitely popped out of this area. Now, I might have to pay attention to these levels back here, all the way back to August of 15. But if this thing gets a little moxie tomorrow, we could be doing a little dance up in this part of the range. So, of course, if I were a trader listening to this webinar, I might want to watch Wingstop tomorrow, just in case it gets frisky again. All right, so other than that, that was pretty much the big winner that Holly spit out today. Other than that, she does a pretty good job at, risk off -1 penny. If she would have stayed in it, she would have made 2 pennies. No big deal there. Took a penny loser, avoided a 7-cent loser, and plugged out of a trade profitable for 8 cents. Had she held it, would have been down 30 cents on the day. So, Steve, anything else to point out about Holly? I mean, it pretty slim pickings today, and just
Well, sure. On the higher level, we talk about directional bias. Today was long. Okay, interesting. Trade selection, trade count. Very, very light. 4 trades at the end of the day is on the extreme left side of the bell curve. Typically Holly might have anywhere from 10 to 25 trades suggested throughout the day. So when you see a very low count, that's also telling you that the AI is being very selective and not making trades just for the sake of making trades because we gapped up. Nope, there was no real statistical probabilities there on a lot of the intraday setups. Now, Jamie and I and Andy can honestly say we've been watching Holly a year and a half now, and when we see a big gap up day, we kind of see this. There's something under the seams there that shows up in the AI that doesn't necessarily trust a big gap up day in terms of statistical probabilities moving in our direction. So she kind of did what I expected today. Came in with only longs. That was unexpected, but it was correct. And the trade selection count was very low at 4. For whatever reason, the canary in the coal mine, as we sometimes refer to this AI? You know, is she out there getting pounded in the surf and big waves, or is she carving up waves in a really nice day where all tides and all boats are being lifted? Well, today was one of those days where there just wasn't a whole lot of moments in time where the AI saw a statistical probability. So anytime we see a low trade count, I think in our own minds too, we got to remember that the AI is doing this for a reason, not just for an emotion, but there's a statistical, numerical, mathematical reason that there's only a few trades that show up. And again, it seems to typically happen a lot on gap up days. So today kind of was not a surprise.
True, and I was just noticing George had a question about, some of the timeliness of the Holly alerts or the big spreads. Well, here's kind of the way we work this, George, is that, we can find the statistical viability or the alpha, as we could say. We can't necessarily always control which stock is going to be exhibiting those characteristics. So, of course, like when Steve and I conduct training sessions with individuals who might be new TI subscribers or sometimes even advanced users that need our help, one of the things that we've learned is to not paint ourselves into a corner. We get way too specific and then we sit there all day. Very few signals come out, and it's bad from a psychological standpoint as well, because you're sitting there, you're waiting, and then, as we know, just because we're watching an alert window, that doesn't necessarily mean we're going to take every trade that comes through there. We're doing the pre-filtering or creating the high quality information stream, but of course the end all be all is the chart, and how much it's moved, and are we chasing, or is it perfect entry, and how's the risk? So it's the same thing with Holly. Every once in a while, now before I say this, we do our best to try to ensure liquid things coming through, but every once in a while a thinner one's going to pop through with a big spread, and of course as we pull that chart up, a lot of the times we just have to say thanks but no thanks. If it's a 50-cent spread and trades are going off on the offer, well, sure, you can try to put some bids in there, but if it's a big spread, it's a big spread. If it's a thinner, one of the more thinly traded stocks, you might pass on that one.
And I might add, on a lot of times the pullback, pulling back,
yeah.
bullish pullback, the quarterback, buying pullbacks. In other words, anything that has to do with the trigger being a pullback in price, those are typically going to be the ones where sometimes the price goes a little bit through and overshoots just a bit, and you wind up getting on the other side of the coin a better price by the time you pull up your broker.
Right, absolutely. And back in 2008, 2009, when I was doing a lot of algorithmic trading using models very similar to this, that was always the unknown factor, right? Well, hey, everything looks good, but did you get all the fills, right? Where, you don't want to just throw markets out there because, well, we all know you can take some very damaging slippage. So then you're relegated to limit orders, and then sometimes the stock never backs off to fill you. So these are things that we can't necessarily see in a report. So I hope that kind of addresses that for you, George. Okay, so that's about it for Holly today. So now let's talk about
real quick. Let me ask Don's question. Yes, Don. He's asking, can you add a column for gaps on price alerts? Oh, on price alerts. Go ahead and finish your
price alerts. Well, I tell you what.
I can. Well, okay. We can take a look at the price alerts, and it's basically just going to be a right-click configure and see if it's in the columns. And if it's not in the columns, Don, that may be a great feature request email that you could send in that could be very easily added. So there's our price alerts window.
We go to columns, and it's the filters aren't on here, right? These are just the custom
data points. Those are custom data points.
Custom data points. So, I was wondering this myself the other day. Now that you mentioned this, I'm like, well, it sure would be nice to add some filters to these, but then again, you're opening up another can of worms, because what if I want to set a price alert, but not just based on price? What if I want to put a volume metric in there? Okay, it's got to be doing 2 times normal 5-minute. So it seems like if we ever do add that, it would be both at the same time instead of just one or the other. But nice observation, good question. That would definitely enhance this price alert window for sure. Okie dokie.
Yeah, it wouldn't hurt, Don, if you want to send info at trade-ideas, feature request, and pop that in there. It's always better to hear it from the users. So they start to compile data on what are the most frequently sought after new improvements that we can make.
Okay, I hope I got this large enough for everyone to read here. I think so. All right, so as we were talking about earlier, expectations, right? Expectations are a huge thing for a trader. New, old, it doesn't matter. You know, if we are going to go sailing out in the middle of the ocean, we better check the wind charts. We better know that we're going to have some fuel out there because we don't want to get stuck in the doldrums, you know, because that's when there's no wind, and no wind, no move, no move. And charts, stocks, very similar, except we use volume instead of the wind or the water, right? So some of you know what I'm about to know what I'm about to address. For those of you who are new, pull that chair up close, because these guys right here are called compare count windows, and boy, did they sing and whistle today. So what you're seeing right here is a screenshot I took off my Twitter feed, which I tweeted these guys out 20 minutes into the open today. Now, let me explain what these guys are before we move on. If I spawn a new compare count window from the TI toolbar, here's the initial configuration panel for the compare count. We've got a green data side and we've got a red data side here. And if we click configure on these guys, you'll notice that they are each their own individual alert window. All right. So I spawned the new one. By default, it's just going to be looking at any stock hitting a high or hitting a low. Now this is the high side, so pre-market, post-market, new high. And on the red side, we have the exact same filter set, but anything hitting pre-market low, post-market low, or new low in the regular session. Now, of course, there's nothing wrong with this configuration here, but with this minimal filter set, you're going to get everything and the kitchen sink, stocks between 1 and 250, 10,000 shares. Ugh, lots of weird things coming through that you probably would not want to touch, but that's what the tick is on the NYSE. It's just simply a ratio of advancers versus decliners, stocks going up versus stocks going down. Maybe some people find that interesting, but what I find really interesting is making custom alert windows, the inverses of one another, and then tracking that data, right? Because that means something to me. So in other words, every day when the market opens, that opening 1 minute period is the busiest, 2 minute, busy, 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 3 minute, but each and every minute after the open, finally about, you know, of course, every day is different, but man, those first 5 minutes are crazy. They open the floodgates. You can make a lot of money on the open if you're prepared, but if you're ill prepared, the slightest bit, imagine trying to hold on while all that water is rushing over you. If you don't have a firm hold, whoosh, right down the tubes, right? So you can make money on the open if you're right, but if you're even the slightest bit wrong, steamroller, right? That's why a lot of traders sit out the first 15 minutes, maybe even the first 30 minutes, right?
Including AI, usually 10 minutes to 15 minutes is the buffer zone before the first AI trades start to come up.
Yep, let that noise get out of the way, and then we focus on the emerging patterns, but we have to give a little bit of time for the patterns to emerge. Now, of course, there might be some 1 minute intraday people sitting out there, and if that's your cup of tea and you're willing to take that risk, more power to you. But the open is a very weird time because there's a lot of activity going on. There's all these crazy orders that aren't me and you and the rest of the day trading community. They're institutional orders, you know, market on open orders, just like they're market on close orders, but they've got to get done for one reason or another. Now, on any given day, with over 7,000, and this is an approximation, over 7,000 tradable securities out there on any given day, only a small percentage are where the party's at. Now, what do I mean by that? Where the party is? well, in my opinion, these are the stocks where the volume is going to be today. And if we have a stock exhibiting a continuation pattern, whether it's the simple range break pattern that I like, or another type of continuation, whether it's a pullback or any other, variant of a continuation pattern, from a statistical standpoint, if the volume accompanies the move, chances are better that the thing is going to do what you think it's going to do. There's wind behind those sails. There's a full tank of gas. There's potential, right? Now, if you try to play that simple pattern, whether it's the breakout or any other one, and it doesn't have enough fuel in the tank, more likely it might go a little bit and then whoosh, curl back over, roll back over, past through your entry point. So that's what we want to find. We want to try to figure out, okay, where are they going to be playing ball today? Because if I can use one of those stocks and it exhibits my pattern, hey, nothing wrong with jumping on the coattails of the institutions, get drug along for a little bit, and when you see that momentum dying, thank you. See you tomorrow. So how do we track that information? Well, these little windows right here, they were just off the hook all day. We saw the opening 20-minute counts, and I saw 64% green on all the big caps. This is stocks between 2 and 4 billion market cap, stocks over a 4 billion market cap, and stocks in excess of a $5.4 billion market cap. Now, typically, on an average day, we're going to see maybe a nice bias would be 53% green, 47% red. And if I saw 53%, I'd think to myself, okay, there's going to be some game out here. It's not just going to be running, we're not going to be sticking our fishing pole in the pond and just pulling up fish after fish after fish. But there's going to be some big fish out there. We just have to be patient, bide our time, and obey our rule set. Now, once we start getting north of 55% one way or the other, that's when things really start kicking. All right, that's when there's going to be a lot of deer in the forest and very few hunters, so to speak. But boy, when you see it past 60, that's when you're like, oh, well, I know there are no guarantees, but whew,
it's a strong
sure
rating.
looks like some upside suckage to me, right? So you can imagine what I was thinking when I saw these levels after the first 20 minutes. Of course, I tweet this stuff out on my Twitter feed, but let's just take a look at what the market did after the first 20 minutes. So here we have the SPY. These are 5-minute candles, 5, 10, 15, 20. The blue arrow indicates the 20-minute mark. So we get the alert here, and keep in mind, this is after a pretty significant gap up, but it just simply did not matter today. There was this after we were told, okay, not only do we have huge upside draw today, because what are these windows really telling us? Well, institutions can't get all their stuff done in the first 5, 10, 15 minutes. They have this thing called market impact. They can't just buy. They would really impact the market. Traders would be fired. Don't get me started on VWAP right now. But
they got to slice it up.
In other words, what they do is they get a large portion of those institutional buy orders done in that first 5, 10, 15, 20-minute period, and that leaves footprints in the sand. But guess what? Most people don't even know that these footprints are being left. More importantly, they don't know they're there, and they certainly don't know how to see them because they're invisible to the naked eye. If you're just focusing on these traditional data sets, what I like to term the first layer of the market, well, you'd never know this, and more importantly, never be able to track it. But therein lies one of the cool things that we do here. We allow you to go down a layer, go down another layer. Layers that are there that most people are never aware of, all right? So they're leaving tells, okay? If the buying bias was this high in the opening minutes, that means institutional buying is heavy. They're not done yet. So if we track the stocks with the high volume, which we perceive to be institutional, then it makes sense that those would be the stocks that hopefully will continue to have upward pressure.
If this is half at all interesting to any of you, wait till the end. You're going to see Jamie's Twitter handle at QuantBot because he does a great job every day, right about the right time of day in the open, sending out a screenshot of what he's seeing in addition to what his thoughts are. So you can get this kind of information in real time, not just hindsight like we're doing today. If you follow Jamie on Twitter, he does a great job of not only that, but throughout the day finding stocks that are wedging or showing nice tight ranges and levels to keep an eye on. So yep, doing just exactly that. There you go. People are just starting to catch on.
Of course, everybody keep in mind, I'm not saying buy this, I'm not saying sell this, I'm just saying, hey, check this out, because really, really the whole concept, and I'll just pull, what was a really pretty one today? I know it was beat. Okay, so here you see beat just marches on up. Of course, this is not attractive. You never know when they're going to pull the chairs away and the music stops, right? But obviously there was a buyer in beat today. Of course, market impact, buy, takes its first pullback, right? If you're a pullback trader, that might have looked real good. What I'm more interested in is this nice little buyers and sellers become somewhat equal. And then peck. They can't stay away. They have to get more action. They have to get more stock. So what happens? It breaks out of this little range right here with volume right here, and then we get a move higher, right? So if we take a look at the Turbo Family Up, no resistance, little multi-strategy window here, then what I've done is I've taken the same market caps that correspond with the compare count windows. 4 billion and higher, between 2 and 4 billion, and sub 2 billion market cap. We're looking for stocks hitting new highs here, but with a little extra special sauce on the filtering end. Number one, these stocks have to be at 100% of lifetime range. What does that do for us? Well, that ensures that when we spot a good intraday pattern and we can make a good entry, and we look to the left over here, there's not going to be anything for it to bump its head into, which is always a good thing. It's not a guarantee that a fabulous move is in order, but if there's nothing for it to bump its head into, even better. And of course, we're looking for a little accelerated volume on the 1 minute time frame, which lets us know, yes, the volume is there. So I tweeted out about 10 of these things today. And the interesting thing about them is some of them continued all day. Some of them we got into the money and they came back down, and some of them actually continued. But being in the money is half the battle. You got to be in the money to take a profit. Now, whether they continue or not shouldn't really be a big factor, other than the fact that if they do continue, we're going to make a lot more profit versus the ones that just rip up 20, 30, 40 cents and then come back down. Because once we get that positive mood, let's rewind the tape back to what Steve and I were saying earlier with Holly. Whether it's a Holly trade or whether it's a trade that you spot on your own, you have to exercise risk management and profit management, money management in general. So, it probably wouldn't be a bad idea if you see these plays unfolding in real time and you get in the money, same little mechanism should kick in. Okay, well, it's getting up. I think it might pull back here. I'm going to peel out of 100. I'm going to keep the other 100, whatever type of, share lots you like to play. But a lot of the times you're going to be presented with not the first entry here and then a little sideways action, but even more breaks as the buyer has to step it up a little bit. So, I went through about 10 of these today, and some of them kept going, like INVH here. What I also liked about INVH, of course, it was a lot more washy earlier in the day. Or what was that, INVH, or was that LBRDA? I get them confused. Let me see here.
Lourdes.
Yeah, this was the washy that I was talking about today. See that little whoosh, right? And then, of course, this was another one that came through right about here, and we can see it's a little bit thinner of a stock. If we look at these 5-minute candles, it's only clipping off about 2,000 or 3,000, 1,000 shares. But once again, kind of going back to the question earlier with Holly. Sometimes it's Holly, sometimes it's our manual trades from our tickers. You know, if you can squeeze off a couple of hundred here without a big spread, hey, a move is a move. If we see this washout candle opening, maybe that's algorithmic washout, but that's certainly a good sign, you know, that
So it is.
sellers couldn't even hold it down for a minute and we get that rip back up. So anybody that wants this window, I will certainly drop it into the chat here in just a moment. But here's what I like to do a lot of the times is just go through the history. I was already on history. So if we correspond this with my Twitter feed, let's see here, just to show the folks what you were talking about earlier, Steve. Okay. I know you're here somewhere. All right, well, I showed that one. Bear with me here, ladies and gents. Okay, now we've got the right thing here. Okay, so I'm just going to kind of scroll through my Twitter feed here. So if you guys want to follow me, I'm just simply at QuantBot. And when you see them come through, you'll notice that they're setting up. Now, some of them will have been consolidating and they stand out like a sore thumb. But let's see, MTN was a good example of one that had a pretty brisk run up initially. And then, of course, we get this nice little consolidated area right here. Sometimes they're only going to last 15 or 20 minutes, but it's what can you identify with the eye here? And once you see this run up and you see these nice little tight bars right here, and then we see, boom, how do we see this? Well, because this little guy told us about it. Hey, MTN, it's hitting a new high. It's doing some crazy 1 minute volume. And then typically what I do is my little companion window here. I'll immediately go and notice, of course, at that time of the day, the relative volume was pretty substantial. Of course, we're closed right now, so all these numbers are different. But at the same time, we notice the huge 1 minute volume. And then Steve likes to do this as well, but we confirm on the 5 minute to see if it's just starting up or if it's already been there for a little bit, right? So we see the nice little penetration pattern here with our low risk, because if we're trying to assess our risk here on these plays, what works for me is looking back 15 minutes, not including the entry bar. Here's the entry bar, 5, 10, 15. Put our stop loss right outside of that little risk or that little wick right there. So just from a spatial perception, risk, gain much bigger than risk, and opportunity to leverage position and milk a little bit more if one so desires. Now, of course, this goes without saying. Look at this guy on the other daily chart, right? Notice how we're using a range break to get us in on the intraday. And then, of course, we see the exact same pattern playing out on the daily, which is one of the added benefits here. Leonardo would be proud. And when I say Leonardo, I mean Da Vinci, who said simplicity is the ultimate sophistication. He would like this trading style because it's the same pattern applied to any time frame. We call it a fractal pattern. So it's very easy to remember the pattern. You know, anything that can occur on any time frame, the simpler, the better.
Mm-hmm. So the one you're going to hand out, that's your turbo?
Right, this is the turbo family.
Okay.
So the name of the game is, okay, try to catch them as soon as they're popping out of a nice little tight consolidation here. And don't worry, because if that one, you know, if I was off eating a sandwich at lunch or whatever, and I missed that, and I came back and I see MTN new high, well, too late. This is pretty down here. This is chasey up here, all right? So we always want to catch them as soon as we can, popping that, you know, popping that range there.
So yeah, Christopher, this is probably a newer version than you've seen in the last few weeks. So if you want to absorb this version, you can receive it. And he's going to put that in the chat window right now. So if you have an older version of that, you can compare and see if there's been any changes in the last couple of weeks.
Right, so there we go with the Turbo Up family. And by the way, while I'm dropping this in the chat, all 10 of the ones that I tweeted out today, they went, and then it's just about managing, you know. Some go a little bit and then fold back over. Some go a little bit, take a breather, and continue. But once again, even if you get a dime move out of the first and you peel out a half and lock that dime in, set your stop loss for break even or whatever you feel is appropriate. It's a very simple methodology. That's the big draw here, is it's simple and it's very powerful. All right. So now the companion windows, the compare counts, I'm going to drop a link in that will have those as well. So give me just 1 second here. And the way that I've got these guys coming, let's see, not multi-strat, but compare count, there we go. These guys will all open up just on top of your existing layout, and then you can position them accordingly and save your default layout. And if you get in the habit of watching these guys, you will open your eyes to something completely different and very useful. All right, so both of those guys should be in the chat window. The Turbo Up family for spotting the range breaks, and the companion windows for tempering our expectations, basically just giving us an idea of what to expect for the day. You could also call these slightly leading indicators. Of course, it doesn't happen the same every day, but I think you're going to notice the correlations, and they can be very, very powerful.
Are those the same compare count windows too, or no change has really been made to those?
No changes. I haven't really made any changes to these in several weeks.
Okay, good. All right, well, I think it's time to bring in Mr. Scott and let him talk about a promo code for people to come in and kick the tires and get a free one-on-one training session and take advantage of why everybody is really digging this product.
Yeah, thank you. Probably pop it back on the appropriate slide.
All right, we hear you. Cool.
So yeah, we've got a podcast on Fridays, and a new one was up last Friday. We've had several really popular ones this year. You should go back through the archives, but to make sure you're getting it, you need to subscribe. So go to your favorite podcast app and search
Jamie, you want to put the slides up?
the Trade Ideas podcast in the podcast app, and then you can add it to your stream of podcasts that you subscribe to, so you get the newest one on Friday. Well, we also have a promotional code. It's AI Trades, all caps, and you can download the handout by going to the handouts panel in your GoToWebinar interface, expanding that and downloading the PDF. That code's going to save you 15% off your first month or year of Trade Ideas, and that also works for standard or premium. So you can save 15% off of either standard and premium, and both standard and premium include a full hour of one-on-one training with Jamie or Steve. If you have any questions, email us info@trade-ideas.com. It's the best place to contact us, or you can reach out to Steve or Jamie directly, steve@trade-ideas or jhodge@trade-ideas. And be sure to follow us on Twitter and Facebook. Facebook's Trade Ideas Pro. Jamie Hodge is QuantBot on Twitter. Steve Gomez is @TodayTrader. Dan Larkin is Trade Ideas 1. Everyone have a good day. We'll have the recording up a little bit later on this evening. You got to remember
All right.
where to find it.
Sounds good. Jamie lost his power, so he says goodbye, and I'll say goodbye as well. See you guys tomorrow.
All right, later on.
Okay.